And for example, in our case, our focus right now is bringing $100 trillion worth of assets that DTCC is responsible for on chain. Many folks here may not know who DTCC is and what we're responsible for. We're the principal record keeper for the U.S. financial markets.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. Buckle up your seatbelts because this video breakdown is going to be undeniable proof that financial institutions are about to flood into the crypto ecosystem, and we are going to see the total cryptocurrency market cap supersede $10 trillion to $15 trillion over the next consecutive couple of years for a fact. As always, bringing you guys some of the realest information in the game. We're going to be going over some fundamentals and some video clips, showing you guys that the devil is in the details. Now is the time to lock in and pay attention. You're not going to want to miss a second of today's video breakdown. So we are going to start here. Just in $1.3 trillion asset manager, Morgan Stanley CIO says, buy the dip. This was posted by Watcher Guru just yesterday, May 19, 2025. This reminds me of something that an individual representative said sitting next to Matt Hugan from Bitwise, talking about how they wish they could buy the dip.
Matt and I were talking earlier about how, ETH was down almost 30% over the weekend thanks to Mr. Trump's tariffs, and we were just saying to each other, God, I wish I could hit the buy button, but like we're companies where you have to get things pre-cleared and so on and so forth.
Then we come over here, and Cointelegraph just posted this today, breaking: Robinhood submits the SEC proposal to regulate tokenized real-world assets, aiming to bring Wall Street on-chain and unlock $30 trillion in total market value. This seems like a very unrealistic number considering that we are only at $3 trillion, but I'm going to show you all how industry-leading experts from the DTCC are telling you all that this is happening right now, and it's going to come a lot faster than most people are expecting. If we come over here, this is a very relatable post because of something that Watcher Guru just posted, showing you all that here at CYPRX, we are consistently putting out value on value, not only in terms of documents, but in terms of panel discussions, all things in which you should be paying attention to. Y'all remember what T's Crypto Spot told you guys a couple of days ago? This was back maybe at the beginning of the year. Well, here is more documented proof from people with credentials telling you all exactly what the researchers have been saying. Not owning any crypto is a bigger risk than owning crypto at this point. The financial world is pivoting, and Japan just dropped the blueprint. If we click here, this is the Future Matters GFTN 2025 Japan Global Leadership Dialogue, Building Financial Corridors Across the Globe. This is back from April 2025. The most interesting part about this document is it goes on to say, the commissioner of the Financial Services Agency in Japan said, this is the time to be very aware of the risk of not taking any risk. This is literally word for word exactly what the researchers have been telling you all. And if we come over here to a recent post from Watcher Guru, this was posted just yesterday, Binance founder CZ said, investing in crypto is risky, but not investing in crypto is also risky. So I wanted to start today's video breakdown out with that, but let's head over here and show you guys undeniable proof that we have been correct here at CYPRX in telling you guys that these public blockchain infrastructures are going to integrate with traditional financial players over time. It's obviously, of course, not going to happen overnight, but maybe 2 years ago, people thought that this was not to be the case, that these financial institutions were going to use private blockchains on a ledger in terms of price action, that we're not going to be able to see this, and that. That is the farthest thing from the truth. Now we have undeniable evidence that they are, for a fact, integrating public blockchains into traditional finance, and they are going to be utilizing these digital assets in an efficient and effective manner. Take a second and listen. This is a video that we posted from a JP Morgan representative 6 months ago, which just goes to show the video material that we post here at CYPRX ages very well. Listen to what he says and pay attention to the assets that he mentions. He mentions XLR. That is going to play an important role in today's video breakdown as we dive down the rabbit hole.
Deploy the JPM coin application within. So we have two, I guess you could say.
And then I would think, go ahead.
Can I add to that? So you do, because you're a bank and you're regulated and you can't work on public right now, but what are you doing in Singapore right now? You working on a public chain or doing examples on public chains?
Yeah, I think you're referring to the Project Guardian initiative, and that kind of goes right very nicely with like the interoperability. point that Annalise made. So yeah, I mean, we've explored like what it would look like to use some very crypto native interoperability protocols to connect to Anthony's network, as well as Avalanche using Layer 0 and Axelar. So we have done that work.
So he mentions how they utilize XLR in this test environment to, show how these financial institutions can utilize public blockchain networks, right? Well, if we fast forward, and keep in mind he mentioned XLR, that's going to play an important role here in just a second, because what was just announced at CoinDesk Consensus Live just 5 days ago. Take a second here and listen how they mentioned Ondo, and that's going to play an important role in all of this. XLR, the XRPL, the Ondo network, it's all being integrated into traditional finance. Take a second here and listen to what Sergey from Chainlink announced just the other day.
JP Morgan, Ondo, and Chainlink. So Alex, Sergey, would love to just allow you guys to maybe spend a couple minutes to talk through what that was and what you're looking to enable with that.
Want to go for it?
Yeah, sure. So the Connexus payments solution from JP Morgan, which has its own kind of payments chain for cash settlement, is now able to be used to do the cash leg, the payments leg of a delivery versus payments transaction for delivery of an asset on the Ondo chain. And that asset is like a tokenized treasuries product. And the interesting thing about this is that cash settlement chain on the JP Morgan side, which has been working well within the JP Morgan infrastructure for many years now, is now for the first time being connected to external public chain systems. So it's part of this larger trend of where institutional chains and institutional systems are being connected to public chain systems, where they're finding more and more high quality assets. In this case, a tokenized treasury from Ondo.
So that is, again, massive confirmation that what we're showing you guys and what we showed you all 6 months ago is materializing and coming into fruition. No hopium, no hype, just straight up research. This video was from 6 months ago. This video where they've now confirmed that TradFi is for a fact integrating with public blockchains like Ondo is only from 5 days ago. Now, keep in mind, the gentleman from JP Morgan in the previous video mentioned XLR. Sergey just mentioned Ondo. Well, if we come over here, this is the document that was just put out from Ripple labeled Tokenization Trends in Businesses and Beyond. And this is from 2025. If we scroll right down here, what does it mention and what does it talk about? It says, short-term treasuries with $2 billion on public blockchains, Archax and Ondo Finance are deploying XRP ledger technology to tokenize money market funds and U.S. treasuries, respectively. These low-risk investment vehicles show promise for higher yields than stablecoins, allowing investors to maximize returns while minimizing risk in their portfolios. Now, specifically talking about Ondo Finance utilizing XRP ledger technology, where does XLR play in all of this? Well, if you guys remember, XLR has also been integrated with Ondo Finance. Ondo Finance and XLR integrate for cross-chain tokenized secure notes. This is back from November 2023. You can read a little bit about this, but here is the fundamental piece. And then also, what did we have announced in 2024? XLR is providing the bridge that allows for seamless movement of assets like wrapped XRP between the XRP ledger and EVM compatible chains. This opens up a world for opportunities for DeFi and real world asset tokenization. So you have the individual representative from JP Morgan mentioning that they utilized XLR. You have Ondo being the first public blockchain announced integrated with JP Morgan, and you have Ondo in previous fundamental video breakdowns integrated with XLR. Do you all see how this is a massive ecosystem that's being built out, but you have to piece the parts of the puzzle together in order to see who the players are going to be? Now, to go even deeper down the rabbit hole, because we have so many more video clips, if we come over here to this individual gentleman here, all right, this is the SVP of corporate development and CEO of Fireblocks, and listen to what he says about how they're focused on interoperability.
Yeah, ATE from the Fireblocks UI. So look, we added staking with you amongst others, and there's I think a lot more on the staking side that will be coming from Fireblocks, especially as we look at other assets, thinking around in DeFi and how we could provide not just staking and not just swaps, but there's probably more there. The other aspect that we're spending a lot of time is you think about stablecoins and you think about tokenization, but you layer that in with the variety of protocols that are out there. And we can make the argument about why you should stick with EVM or why EVM is no longer the best. And there's options like Solana or newer players like Sui and Aptos. But the better approach is thinking about interoperability. And so Firebox is working with others in the market, and announcements coming out hopefully soon that will explain how, when you're tokenizing an asset, think natively day one when you tokenize it, how to work with the right protocol so that your tokenized asset has that interoperability capability.
This is again the gentleman from Fireblocks, and I'm trying to show you all the partners in which they've already announced for interoperability solutions. If we come over here, this was an announcement back from 2024 in July. Fireblocks and XLR. We see financial institutions coming to consensus that interoperability is critical infrastructure for on-chain finance. Some are active at the security protocol layer, staking XLR to help secure the XLR network. By leveraging Fireblocks' robust security features, these institutions are participating in multi-chain visions for Web3 at multiple levels, facilitating safer and more seamless cross-chain transactions for a diverse range of applications. So they've already integrated with XLR. This just yet again shows that XLR, the XRP ledger, Ondo Finance to some degree is going to be utilized by large market participants in the future. Now, back to this post from Cointelegraph, right? Because I don't want to leave this behind. Robinhood submitting the SEC proposal to regulate tokenized real-world assets, aiming to bring Wall Street on-chain and unlock $30 trillion of market value. These numbers are peanuts. Take a second and listen to this individual representative from the Dtcc, where he goes on to mention that they are attempting to bring $100 trillion of assets under management on-chain.
Say real world knowledge and experience working with blockchain and crypto to how you're kind of managing different projects, initiatives at your institution today. Maybe Dan, I'll let you dive in.
Well, it's actually interesting to see how this conference has evolved over the years. First of all, the clothing is a little bit different. 10 years ago, it was a pretty wild attire from the conference.
No capes this year that I've seen it.
I haven't seen any either. I'm kind of disappointed. I was hoping for a couple. But that also reflects the kinds of investment opportunities and the crowd in general. It used to be that 5 to 10 years ago, it was what kind of wild investment opportunity was it? You could invest in race cars, you could invest in sports teams, you could invest in your own island if you wanted to. These were interesting for sure, but not projects backed with a real investment thesis. And that's fundamentally different today. So, just this example with real world assets, this is now a very real disruptive force to traditional finance. And for example, in our case, our focus right now is bringing $100 trillion worth of assets that DTCC is responsible for on-chain.
I'll pause it right there. He just said the goal of the DTCC is to bring $100 trillion of assets on-chain. So when you have a post from Cointelegraph talking about $30 trillion worth of assets and what Robinhood's goal is, those are peanuts, not even half of the value of the $100 trillion of assets that the DTCC is attempting to bring on chain. Now, I posted another recent video breakdown of Sergey at the same panel discussion where he goes on to talk about non-compliant versus compliant value, right? And how right now the non-compliant aspect of this digital asset ecosystem only unlocks $5 to $10 trillion worth of value. However, once these financial institutions have regulatory clarity and the infrastructure is soundly put in place, this unlocks the compliant aspect of capital that is ready to onboard into this space. And that's $100 trillion plus market cap for crypto. Take a second here and listen to this video I posted.
At the same time, as we've been working with the DeFi community, in parallel, we've been working with the TradFi capital markets community. This example with JP Morgan is one good example. Another good example is our work with DTCC before on something called SmartNav, where we put data about NAV calculation on chain for tokenized funds and this stuff and many other examples. The other category is the compliant capital category that the DTCC and JP Morgan are really the top two players, I would say. Like if I had a choice of the top two players in the US economy and maybe in the global economy in relation to the amount of capital and amount of things, it would be JP Morgan and DTCC. JP Morgan's the leading US institution, and the DTCC is the leading financial market infrastructure of the world, right? Yep. And we've had some amount of work with both of them that's now public. What I've found is that the non-compliant capital, and this is why I bifurcated this way, the non-compliant capital doesn't care about compliance. So they can just do things. They can build decentralized exchanges. They can build lending markets. They can build tokenized whatever. Even stablecoins, for me, kind of fall into non-compliant capital for their first iterations because they weren't doing it in like a super compliant way. They were like in a gray area, right? Now they're becoming compliant. Compliant capital is much, much larger. So non-compliant capital takes our industry from that 500 billion to 5 or 6 or 7 or maybe 10 trillion, my opinion, depending on how much people want to allocate to cryptocurrencies. The compliant capital takes our industry to 100 trillion plus.
So we'll go ahead and we'll pause it right there. That was a lot to unpack, but long story short, right? Moving from this non-compliant aspect of capital to this compliant aspect of capital, people still can't comprehend that that is for a fact coming. Let me prove that to be the case. So we're going to come back over here to the gentleman from the DTCC saying that institutions are 100% here in a big way. And then we're going to get multiple confirmation from other large industry leading experts saying the same exact thing. Take a second here and listen.
Yeah, look, I want to finish on the previous point because I think it's important, then pick up because it dovetails in. We'll be there as an ecosystem when there is no distinction between institutional and retail. They're all part of the same fabric. So currently there's a set of services that are only available at the institutional level and that aren't available at the retail level. Well, that's not right, fundamentally. It's not because of bad people. It's because those processes are so inefficient that they don't scale out so that retail investors can take advantage. We're seeing that change as these services become much more efficient. Now, the part that was missing in the past to cause the tipping point for the institutional level, it was two different worlds. So if I wanted to work in the blockchain space, I had to build yet another accounting system on top of the 13 accounting systems that I've already got. There's very little additional value to my customers. If they're doing trading, they can already trade on my existing systems. So there wasn't a cost benefit until a few weeks ago. So a few weeks ago, we demonstrated collateral operations at global scale. Now, the reason why this is so important, it turns out most financial transactions at the institutional level are driven by collateral. So if you look at daily trading activity, trading of shares of stocks is small by comparison to the volume of repo trades and of margin trades, et cetera. It's much bigger in terms of transaction volume, and it requires advanced collateral processes in order for this to take place. Well, legacy systems don't move collateral fast enough. And on April 9th, DTCC was responsible for approximately $20 trillion worth of transactions on that single day. That was largely due to market volatility. Locked up collateral, it typically takes about a day to be able to move the collateral in existing systems, will cost banks on that day $100 million. Well, it becomes very easy to justify an investment in a technology that can help you settle collateral instantaneously. And that's in fact what we showed. Blockchain is better for real-time transactions at global scale when there are advanced rules that need to be enforced in smart contracts. So there was a lot of work that had to be done to get to this point. But we're really at that tipping point where I'll tell you, every bank that we work with at all the major institutions are not just dabbling right now. They're racing headlong into this space because of the financial difference. The impact on the bottom line is finally there.
Wow. People, ladies and gentlemen, smash that thumbs up button and subscribe. We are at the tipping point. This is a huge confirmation. April 9th, they tested this. For a fact, it works. He literally just said blockchains are better and institutions are headstrong to come into this space. This is massive confirmation uploaded 5 days ago, and you're seeing it here at CYPRX. As always, this is such a jam-packed video breakdown. I have one more video clip. I had a whole bunch of other ones that I wanted to play, but we're already going on 22 minutes. And so I'm just going to play one more. I'll make another video breakdown and play some of the other videos that I wanted to display for you guys. But so we just hosted this call live, and it was a panel discussion that took place with the Ripple representative, an individual representative from Bitstamp, and I'm not too sure the other gentleman's credentials. But all in all, they stem from large organizations and have valid credentials in this space. And just to solidify what the gentleman from the DTCC just said, listen to what this gentleman, Alberto Chow, says here about how institutions are participating in a more meaningful way.
To a point where the industry is maturing. And so naturally, you know, a lot of what's historically been built in the traditional financial system, crypto is inevitably going to have to get intertwined into that. And so, you know, to me, you know, and I think we've touched on this point around sort of crypto innovation. You know, I think we're at a stage where the industry has gotten to a great maturity level, but secondly, I don't think that's going to stifle innovation in any way. You know, I think it's just going to happen in a little bit more of a structured and methodical way. We still see some of the larger financial institutions, the big banks, the large asset managers, et cetera, trying to participate into crypto. I would expect them to continue to build. But, you know, as you think about their businesses more broadly, they're very large, complex organizations that are very intertwined into the regulatory environment. And so, you know, this is one environment in a unique environment where we have a new administration that's supportive. We're going to hopefully in the next couple of months or into 2026 get a little bit more regulatory clarity, and then until that happens, we'll start to see a wave of, you know, large financial institutions start to participate in a more meaningful way. And so I think it's going to happen. I think it's just going to take time, and I think a lot of those institutions who have been sidelined for the past few years are planning to participate in a more meaningful way.
I think those institutions, by the way, this gentleman, Pat Thielon, is the gentleman from Ripple. He mentioned, Alberto, that all the institutions that were sidelined are about to start participating in a more meaningful way. This is huge, and we'll wrap up the call here for today. As always, bringing you all some of the realest information. I'm not telling you guys to go out there and buy the dip, but individuals with actual credentials in this space are. Take a hint. They tell you guys this stuff. Now, when I was watching this video breakdown live and hosting it this rising, there were only 31 people listening to this live. Now, because I streamed it on X, having joined the podcast myself, there was obviously, of course, more viewers. But without that, it just goes to show that nobody's paying attention to the information that these large market participants are putting out. So lock in, pay attention to detail, buckle down, accumulate digital assets that provide real world value and have tangible utility and will bring something meaningful, not only to traditional financial players, but to the global financial ecosystem. Have a long-term vision and understand that these institutions are for a fact about to flood into this space. With all of that being said, make sure that you smash the thumbs up button and subscribe to the platform, share this video breakdown, and I will see you all in the next video.
interoperability capability.